Good morning, everyone. This is Teddy Kekstadt from Forex Trading Unlocked, and we are here with a Forex market breakdown for you. And we just want to cover our accounting first, just to show you the disclaimer, to let you know that this webinar is for illustrative purposes only. So with that, let's check out what's going on in the economic calendar this week. Not a lot of major numbers coming out today and the rest of the week, but we do have a couple. For the US dollar, we have retail sales. That's always one of the big economic numbers, and especially since we've had some manufacturing slowness numbers pop up recently, it'll be interesting to see how retail sales comes out today. We also have, for Canada, we have the CPI, and then for the excuse me, the British pound, we have the Bank of England Carney speech that is going on today. Then we have for tomorrow, which will affect the euro and the pound, we have the European Council on Brexit. And then we also have for Australian dollar, we have their employment number, and the Royal Bank of Australia has a speech also coming out tomorrow. And then we have on Friday, we have a continuation for the euro and the British pound for the European Council on Brexit. So the main focus, especially over the next couple of weeks for the currencies, will be eyeballing the Brexit situation. Obviously, Brexit's been a topic for, well, it seems like forever now, but we are coming up to the October 31st deadline. And a lot of things have occurred over the past couple of weeks leading into this European Council meeting over the next couple days. Right now, it seems like a lot of heads are butting, and a hard Brexit is going to be most likely what is going to occur, but we never know. It's been kind of a roller coaster ride, so we'll see what happens. Definitely, it's going to have an impact on the euro, the pound, and also the US dollar. So with that, let's take a look at the euro US dollar. So if you saw our webinar last week, this looks very similar. The euro has started to touch into our target range. Right now, the market is pretty quiet, and especially considering what's going on over the next few days, I would think that the euro US dollar as well as the pound US dollar might start to have a little bit of drying up in volatility. So for direction, whether you're upside or downside, it may be really an iffy trade. As you can see the range on the euro US dollar in this chart, it started to set kind of a consolidation here. So now this green line here still remains from last week, this $10.30 pivot. So is it necessarily a directional line? No, but it's definitely a critical area for trading. And if you can look back, you can see that there's a lot of swing trading going on off of this level where the market doesn't seem to gravitate too much above or below. Kind of a similar situation what is going on right now. So we had our initial buy signal that set this bottom a couple weeks ago. Now it's obviously confirmed the bottom, and the market has touched into this target range. So the upside potential for this is probably maybe a challenge of this $1.1115, but I would say over the next 2 days, I would use caution, and it's probably going to be more of a neutral range traders market for the next 2 days for the euro US dollar as well as the pound US dollar as we head into the Brexit meetings that are going to occur starting tomorrow. Obviously, there's still some numbers that are going to be out, but as a whole, all the economic numbers for the euro as well as the other European markets are pretty much small to medium range numbers. So there's no expectations, if you will, that we should have anything to really stir up the euro US dollar. Obviously, keep an eye on the dollar index. If you have a major rally in the euro turnaround in the dollar index or pressing of resistance, there's a good chance that the euro US dollar may see a little bit of suppression, where the bears might start to test support. And so that's why I'm saying I think that for the next couple of days, this $1.1030 critical pivot right here is pretty much where I think you're going to see the market gravitating to. So as like I said, for bulls and bears, I think you're going to have a little bit of a rubber band effect where rallies are probably going to run out of gas, and breaks are probably also going to do the same, where we're just going to constantly hover towards this pivot. So excuse me. So for those of you that are aggressive bears, I would look to sell any type of rallies right now. And if you're aggressive bulls, I'd look to buy into the breaks with minimal expectations. So what would be your key levels to look out for here? So anything below about 1030, we've already come out of this downward sloping trend line. So the trend no longer is, even though it's still overall bearish and hasn't really been confirmed to bull, the short-term trend is neutral. So, and with that being said, we're going to use the higher move highs and higher move lows as our keys for pivots here. So we have our key dot, we have the about 1030 as our center. And then we have this below it at $1.0939. So this here is based off of this last low here. So this trend in the short term is to remain solid. Trading should not get below that 109.39. Any failure from a $1.39.95, or excuse me, a $1.09.39, this first lower yellow pivot here, definitely would have the bears salivating and looking to press this 108.80 level, which is the old lows that was set back, excuse me, at the beginning of the month. Now, is it likely that Euro US dollar weakness is going to take out those lows and press those lows as we head into the Brexit mark? Probably not. The overall trend obviously has been trending lower, and even if you look at the more intermediate scale, we hit this low. Right now, this target range still has us at a lower move high. So we're kind of, like I said, since we broke the trend, we're set up for neutral more than bearish. So this key pivot here at 109.39 is definitely holding up any bullishness. Failure here has the bears, like I said, salivating, pressing these newer move lows at 108.80. And that would also probably be the scenario that would bring this into light, especially a very bearish sell-off, would probably have to be because you have a lot of US dollar strength, which right now the dollar is kind of calming down right now. Euro strength is not anything to really reach out for right now, because all they're doing is downplaying the EU, the EU economy, the EU manufacturing, EU forecasted numbers for the next couple months. So unless there's a change in that forecast, there's nothing really to support the euro. Just the fact that this 108.80 area is right around the psychological level where the market seems to have a trouble to get above. Now, if you look at this bottom, it's almost like we have a head and shoulders that's forming. So it wouldn't be out of the realm of possibility that after Friday that we still see the bears try and bring it down here. But as long as this 109.39 holds, then I would say that your range trade to bulls are going to have a good shot at having another wave higher that will target up towards this 111.15 area. Now, obviously, we still have 2 weeks left to go before Brexit. Let's see what happens with the European Council meeting over the next couple days. When Friday occurs, obviously the topic of the weekend, I'm sure, will be what has been discussed. But I wouldn't expect any major shakeup in these currencies, at least until probably Sunday night, Monday, as everyone digests what has occurred over the course of that meeting. So with that, let's remember the key pivots here. So if you are a bull, right now, you look strong above 109.39. So as far as looking to buy into dips, and especially a breakout of 111.11 up here, 111.15 up here, that would be a major bullish sign. So now that would probably be brought on because of a deal that would be where the kids at the table start to actually act like adults. Probably not going to happen. So I wouldn't have your expectations to see much of a challenge, or most likely a failure of this level first up here at 111.15. Remember that this buy signal we had, this is the target range. It's not that it couldn't continue to go higher. We're not saying that. All we're saying is that for the expectations of this signal and this move, this is the range where it's looking to run out of gas, and right now we're at the bottom of that with this key 110.30 pivot holding up that range. So since we talked about the euro, now we have to look at the pound. Now, ironically, the euro and the euro US dollar and the pound US dollar are short-term bulls. This is the first time this has happened in a while. So anyone that trades the euro US dollar, and especially the pound US dollar as well, knows that as while they have been trending lower, the pound has been a little bit stronger in certain ways as of late. This chart here is a monthly chart, not a daily chart. So that's why you have to look at this and see, wow, this has been trending higher now since basically since August. Or sorry, this is a weekly chart, not a monthly chart. So you can see that the trend has been strong, and this has all been since Boris Johnson has come into office, and then even after having Parliament, when he prorogued Parliament and then Parliament came back, it seemed like that he might start to run out of steam. Well, Boris seems to be a tough fighter, and as you'll see that on the weekly, last week we settled above this downward sloping trend line that had been containing the market for the past basically since the beginning of or the end of 2019. So now we have this week, and look at this. We are strongly above this pivot here at $126.66, and we're heading towards this target area. So now this chart, now you remember this is a weekly chart. So this is a directional target area that would probably take on a monthly basis, unless we have a big rally like occurred last month. This is going to take probably the next month or so into November to challenge this target area, especially this level. If you look at the yellow pivot line here at $129.53, this is a key area where I think that initially the market is going to have a little bit of trouble to get above, especially before there is a Brexit deal. However, I think that as we head into October, we do have a good chance, or excuse me, into November and the end of this Brexit period, at least this period, we have a good chance it's coming into this target area and maybe challenging this pivot. I don't see the market getting above that. Even though it's been very bullish, you have to look at it in the longer term sense that if you look over the course of the past year and a half, this market's been a bear, and this could be just a corrective move higher. So we don't have a confirmation that we're going to have a real true long-term bullish turnaround for the pound US dollar. And that's why I would say that you're probably going to see a lot of hungry bears jump in around this $129.53 area. And also I would think that after a run up like this, you're going to have a lot of your weak longs start to bail in this area also. Now let's look at these other pivots here. We have $126.66 that we first mentioned. This is definitely our upside support line. Any failure here doesn't necessarily take us off a strong bullish campaign on the weekly or even on the daily. It just starts to put us into a corrective digestive phase. So this has been a nice run up. We have made a higher move high. So the question is it time to retrace a little bit and set a higher move low? Or is it time for the market to turn because this overall trend on the weekly has been bearish? So right now, we don't know if we're in a corrective phase or if we're in a trend reversal phase. The main thing to pay attention to is the Brexit meeting coming up over the next couple of days, as well as the target of October 31st. And since we have the central banks that have been talking and talking and talking for the past 2 months, they're starting to fall off as far as the news. There's not much more they can do. We already know how hawkish they are, and especially which central banks it seems are going to still continue to ease. The BOE, however, the Bank of England, doesn't seem to be so much of a factor with that, so that's probably a variable that we don't have to worry about coming in. And I think right now we just have to ride the trend. The trend is your friend. So this is a weekly chart that has shown quite a show of strength. And if you have to look at this, the euro, when we were looking at the daily, it's been trending lower for months, and it's starting to show some signs of bullish strength. Now with the pound here, if you look at this chart, as far as where that low is, you're below that $120 area. So in the past just couple months, we've gone from $120 all the way back up to where it's trading today, right around $127.42. So now remember, the pound US dollar typically has wider ranges than most currencies, but even still a $7 rally over the past month and a half, basically. And yeah, let's see, that's 1, 2, 3, 4, 5. Yeah, it's a month and a half. That's quite a surge of strength in the British pound, in lieu of the fact that there's all these pressures to keep the pound down, especially with the EU trying to make this Brexit as hard as possible. Now, there's a lot of variables they're going to be discussing over the next 2 days. And just like I said with the euro, we're probably going to start to see this market settle down, where you're not going to have much directional information going on. That being said, I would key off the 126.66 pivot here. Any failure from this level on a daily, weekly basis, what have you, regardless, we'll definitely, I think, have the bears getting this market to test support and keep the pound on edge as we start to correct backwards. Right now, we have set a higher move high. It's time to maybe have a correction to set a higher move low and find out whether or not we are truly starting to have a strong upward trend evolve in the pound US dollar. So correction, not that it's necessary, would definitely help to give us a better guideline as far as whether the market's going to have strength overall as we head into 2020. Remember, this is a weekly chart. That's why I'm saying 2020, even though it's only October. But these pivots, oops, sorry about that one. So real quick, that 126.66 is definitely a big pivot. Below there, I think that you're going to find a lot of support down here at this buck 23.69. Only if a failure below here will we have this lower, this low here at a buck 21.88 start to look in jeopardy. And any failure there, obviously the bears are back. The trend is definitely bearish if that should occur. But right now, we're looking to follow the trend, higher move highs and higher move lows. If that trend is your friend and that continues over the next few weeks, then there's a good chance that, especially as we head into Brexit, which would be almost like ironic if over the next 2 weeks we hit in this target area, the Brexit date occurs. It's going to be a hard Brexit that probably would set the pound US dollar into a reversal of trend. And then also remember to key off of the dollar index. Right now, the dollar index, although it's strong, is starting to show a little, not weakness, but just not a slowing of momentum, which right now is giving the pound a little bit of a lift and obviously taking the US dollar back a little bit. Now let's go to the US dollar Canada. We have the US dollar Canada that is just a sideways nightmare. This market doesn't seem like it wants to go anywhere except for, just bobble around within this contained range between a buck 33 and a buck 31. The market is wedging, as you can see on this daily chart. We have obviously that Canadian number that's coming out this week. Is that going to set this market off? I really don't think so. I think that as we start to come into the U.S. trade war talks with China, which definitely impacts Canada, and the fact that oil is relatively stable in the range that it's been trading now in the past week and a half, that probably is going to keep the U.S. dollar Canada in a range trade. Right now, there's no reason to, even if there's U.S. dollar strength or weakness, to think the U.S. dollar Canada is really going to spark a trend. So this is good information for range traders. I would look to, especially as this market's wedging, any type. Right now we have the key pivots at $1.33, $1.33.34, $1.31.83. Which is not that big of a range. There's definitely some action that can probably be taken. A failure from a buck 31.83 would have the bears making newer move lows, which then, after newer move lows indicates a change in trend short term, and then the bearish momentum most likely will start to build below there. Because a failure from a buck 31.83 then has, like I said, it's going to take out the upward sloping blue line that is the support for this wedge, as well as make the newer move lows. And below that, you only have to go just another down to a buck 31.40, which is not that far to really start to press extreme lows in a bearish sentiment. So this chart looks like kind of big, but it's actually a contained wedging area. If you look at the distance, like I said, between these two pivots, this is not a big range here. It's $1.50 range. The same thing goes to the bulls. Like only a breach of a buck 33.34 takes us off edge as this market makes higher move highs. So right now it's contained because if you look at how this trend has started to wedge, you had your initial points with the downward sloping blue line and the upward sloping blue line come into these points, and we have an interesting situation. We have made a high, we made a low, we made a higher move high, now we made a lower move low. Well, whenever you do that kind of situation, it typically is an indication of a short-term market pause, hence the wedging situation, looking for a breakout. So that's why we're right now I would say, especially because we have Brexit going on, the trade talks going on, relatively stable oil, and especially since there's now sanctions being levied on Turkey and what have you, it seems that geopolitically, as far as strife is concerned, we don't have to worry about any major conflicts that are going to shake up and stir the market and cause, for instance, a flight to quality in the US dollar. What would that do? That would cause most likely a rally, in the US dollar Canada. However, right now it seems we're not in that period right now. So for range traders, I would key off of these two strike prices around these two yellow pivots and look for it to contain. And most likely, like you see this big elliptical containment range, this is a daily chart. I would say that over the next couple of days, there's a good chance that we're going to probably, by attrition, just go sideways, holding us above this upward sloping blue line as well as this lower pivot. And then we can start to eke into this containment range by attrition over the next week or so. And also, like I said, if you as we go sideways, if we start to fall on support, if we take out the downward sloping blue line and then a failure of $1.3183, then you know that most likely we're starting to show more weakness in the US dollar and strength in the Canadian dollar. So that would be a good area for, so if you're an aggressive bear, you look for a breakout below there, or if you're an aggressive bull, you look to get long somewhere along that area, and you know that your risk is just below $1.31.83 here. So for aggressive buyers, this would be your buy zone, and I would use this yellow line down to this low as your risk. And if you're an aggressive bear, now's the time to watch it, see if it can press this and fall through. But remember, if it does fall through, it probably may just take this down to the lower end of the range, which is where its most recent low was made back in September. And then again, if you're bullish, now remember, have rational expectations. So let's just say theoretically that the market does start to rally here. Most likely, it's going to just be contained by this wedge. That's really where we're looking at the US dollar Canada as far as momentum over the next week or so. There's not much that you really can grasp on for any type of explosive move one way or the other. Not that it's a dead trade, it's just more of a range trade, sleepy trade, kind of like how the euro has been in tight ranges for the past couple months where there's only some trend days, where most days as a range trader you can get away with trying to basically highball and lowball the market based off of where it closed on the previous session. When you have like a containment of like only 50, 60 pips of a range for a currency like the euro, US dollar, then you just basically are fading basically 40 pips away one way or another, which seems to, not that that's a system you should look at, but that's, if you look at the bars, that's what it's happening. You're not getting much more beyond that. And then the Canada also, take a look at, except for a couple of days where it moves, the bodies of most of these candles are pretty tight, and there's not much of a big deal as far as the relationship between closes and openings, where one day it closes up here, it comes back, boom, 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 and it just comes back. There's not much to work with. And notice the bulk of the trading also for this range here is basically within this containment range. So for your volatility traders, I think you're probably going to be on hold for a little bit. For your range traders, trade the strikes in between these levels. And I would say, like I said, for aggressive bulls, you can use this lower pivot down here. And then for the bears, I would use this upper pivot also if the market starts to gravitate towards here. And remember, only these are breakout levels, so only above or below them when I start to think about some sort of major trend issue being developing. So with that, I want to remind you to always do your homework and look at the markets, weigh the potential trading situations, have a plan for what you're doing with the markets, especially since we have the Brexit meeting going on. Please make sure that you pay attention to what's going on and expect the fact that the currencies are probably going to dry up over the next couple of days, giving range traders a lot of opportunity and giving bulls and bears one big headache. So I'm Teddy Kekstadt from Forex Trading Unlocked. If you like this video, you can always find out more information with what we have going on at www.forex-trading-unlocked.com. And please like, follow, and share us on Twitch and StockTwits. And if you are interested in how we figured out that low in the euro US dollar with that high probable Japanese candlestick pattern, You can learn more about patterns like that in my book, High Probable Japanese Candlestick Patterns, which is available on Amazon in paperback and Kindle version. And through that, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets in any markets. They work in options markets, currency markets, stock markets, you name it. So there's no discrimination by those patterns whatsoever. So with that, I want to thank you very much for your time today, and you have a good day.